Let's continue the discussion from the previous speaker. We will talk about legacy system and how we can get rid of them. This is an issue for all of us all the last years. All banks have, National Bank of Greece exists since 1841. We are almost 200 years old. And as all the old banks, we had a legacy system. We started very early in the 60s and after. So we had also, as the previous speaker said, a transformation program that we think it's a successful one. And we are about to change procedures, but also the IT. So the discussion is, there is the trend we have, how to change your core system. You have two basic approaches. The first is get rid of all of it and do it from scratch. And the second one is to try to do it in different phases, more in a more adaptive and maybe a more productive way. Let's discuss on this, and I would like to have examples, lesson learned, and things that the audience can follow up with us later. Michal, please tell us.
All right, thank you. I wanted to give the floor to my honorable colleague, being chairman of the conference, but here I'm the first one to go. I will try to connect a couple of dots that already were here during the conference being mentioned. So one of them is basically the margins getting lower, right? So before you invest, right, because it's kind of an investment decision you need to take, you need to make sure you have enough money, basically, right? So all of those reasons, I don't want to talk about them, too much. We are all aware of it. Why the margins in banking, especially retail banking, are coming down. Regulations, right? Competition, international fintechs, all of those reasons, and take a look that regulations are cutting the margins on the revenue side and the growing costs at the same time, right? So so this is difficult. So you need to answer yourself a question: can you afford it, right? So my answer to the question you raised would be: it depends, right? I have a couple of the famous lawyers answer: it depends, right? I have a couple of examples in my head, because what I like about this conference is that we are all guys that are doing that business on a daily basis, right? So a practical approach of it. I would give you an example of not necessarily the core system of the bank, right? Because I'm more into payments, right, than the overall core banking system. But I would say it's a good example because payments are pretty difficult a part of the business because of the large scale of the transactions, right? You need to support because of the constant nature of those transactions. So for example, if you want to do a mortgage, you need to be there for a couple of hours a day, right? But if you want to do, I don't know, card payments or whatever kind of payments, you need to be there 24 hours a day, and it's much more transactions going on, right? So it's a usually a difficult transition, difficult shift if you want to change those systems, right? There is a crossroad of different regulations, also international standard of payment schemes, and there are a lot of partners in the ecosystem, right, that you need to compatible with, right? So it's a very difficult thing to change those systems for payments. And I would give you an example of our national champion. We are proud of it in Poland. It's called Blik. Maybe you've heard of it. It's kind of a kind of a national scheme, alternative scheme for payments. It's growing really, really fast in the last couple of years. And not sure if you are aware of it, but Bleak agreed to sell like 20% stake to MasterCard, right? So and because of it, one of the things that they got apart from the money is that they got access to the technology. So tap to pay, for example, right? So Bleak could offer a better UX experience for the customer being tap to pay, right? And also international exposure, right? So the customer having Bleak on his phone, he can pay also in other countries, right? Because using the MasterCard railways. So what I'm trying to say here is that, they were building a lot with the banks in Poland, like from the scratch, the systems, but also, they've seen a good synergy to use what was already there as an infrastructure and make it happen again. I think it's a win-win for Bleak and for MasterCard. There are some downsides of it, but that's kind of one of examples. And the other one would be
what's the lesson learned behind this deal, this joint venture?
Well, I think the lesson learned is like we are saying that that even if you build something new, to get the scale, to get profitability, and to get up to speed with customer satisfaction, customer UX, right, or functionalities, you may want to use some things that are already available there and try to find a cooperation, try to find a synergy, right? That's, I think, one of the lessons learned.
Startups are not fintech startups are not standalone.
In a way, some of them are trying to, and maybe even successful, but most of them are not, right? Even the mentioned Revolut, right, is cooperating with many other.
We had a similar case in Greece with Viva Wallet, which was acquired by JP Morgan.
Right.
For the same reason.
Exactly. I can give you another example, or I can leave it for later.
Of course, yes.
Okay. The second example I wanted to mention is there was a wave of buy now, pay later. I'm not sure if you remember on the market, right? Everyone was talking about buy now, pay later, right? And I used to run a big portfolio of cards in Santander Bank back in Poland, which was the second debit and the third credit card portfolio on the market, right? So, like 5 million cards, 5 million debit cards, 1 million credit cards, more or less, right? So relatively big portfolio. And they were coming to me saying, okay, let's invest that crazy number of millions, to develop our systems. Actually with Bleak to offer a kind of a BNPL solution, right? And I was scratching my head, taking my business experience into account, doing some calculations, and said, guys, you know what? It doesn't make sense for us, okay? Because if I have 1 million customers having my cards already in the wallets, credit cards, right? And they are underwritten by the risk, the credit risk, right? Already, if there is a huge portfolio and there are ready systems, ready processes, everything works fine, I would rather focus on that, and my card system can offer installment loans, as a feature of the card, of the payment, instead of jumping on something completely new, which will not bring me enough new value, but will bring me much more new cost instead, right? So I said that's not a good idea business-wise, even though everyone around is talking about it. One of the reasons was that the guys were saying, okay, you can escape from some regulations, right? Because it's not so much regulated yet. And I said, okay, yet is the clue word here, right? Because the guys who started to do it, a couple of years ago, they benefited from that, Klarna and this kind of things, right? But because of the social problems in the US popping up, especially with the young generation coming out of BNPL, the regulators are, starting to look at this more closely, and it's going to be regulated pretty soon, right?
Sorry to interrupt, but I think we will talk about regulation in the second question.
Fine.
So
I just said there is no premium coming from that, and you need to pay additional costs. It doesn't make sense. You can do it with whatever you have already in your systems, in your customer portfolio, right? So that's another example that you don't have to always jump blindly on something new coming up, right? But you need to always take the business case kind of a calculation.
But if I understand well, you lost a client, a customer there.
No. Well, if I may lose it if I'm not active enough on my portfolio, if I'm not active enough to propose my product, which has the same functionality at the end, to the new customers, I may. But that's not the best way or quickest way or most efficient way to get to the goal.
Thank you.
Just quick reflection on buy now, pay later, and running your business with cards with later payment. You can just relabel it. You can just say, okay, our cards already have pay later.
That's what I said. Yeah.
But back to the original question. The problem I'm seeing, and actually all of you mentioned it, and it was mentioned also in the presentations. We, in one hand, from very good reason, look everything through the investment. Of course, you need to have money. But sometimes I have a feeling we lose the track actually, what are we trying to achieve? And just example to make, in many banks I saw, there is a target, okay, we go cloud, right? But cloud isn't and shouldn't be the target. Cloud is simply one of, for example, technologies which is around there. It is offering certain benefits. It has certain risks and serious risks, which I try to highlight. And you should think, what are you trying to achieve actually? What is the level of or operating model for your bank to be? How can cloud support it, and where it cannot support it, toast it off. Simple as that.
Cloud could be a target for providers eventually.
Could be provided for providers, but again, a point is, cloud, first of all, shouldn't be a target architecture for everything.
No, it's not cloud, it's AI.
It's AI.
Cloud.
Even that. One of the sales propositions of the top 5 cloud providers is that they have already built in quite a lot of AI capabilities within their systems, which means if you are migrating your core systems and your functions and everything into that, you can kind of natively use it, which is good selling proposition, no question about it. But again, those engines need data, and obviously they need your data. Right? So which means once when you transfer your systems, core systems data there, those AI systems are going to work even better, but again, on your data. Do you really want that? The question is always, if you are combining lessons learned or data whatsoever from several banks, those AI agents are going to be better because they depend on the quality and quantity of the data. That's simply mathematics behind it. But the question is again, are you want to be exposed as an organization, or you want to run into the risk where your data is not any more controllable by you?
Okay, let's rephrase to help our audience also to understand. Let's go with go, no go. In which case you have to go from scratch? Do we have any examples to give to?
I think it's just simply comparison of financial calculations, right? Like the business case, right? You need to calculate option 1 and what's your bottom line in that scenario, and the second scenario, right? I need to compare which one is better.
So business planning.
Business planning, definitely.
Right.
And apart, on the top of that, I would add one more thing. It is much easier to go agile, which means a stepped approach, right? To go step by step.
Okay. We will talk about agile in the.
Okay, because of the board's acceptance.
But we all know that business planning is real for 6 months, and then it needs adjustments. So
that's exactly the problem. If you want to make some transformation, it takes certain time, right? And problem is that
how much time does it take?
It depends. There is no magic formula for everything. But when you ask, since you asked when to go to the rebuilding whatsoever, it's always technically easier and cleaner to build something new and migrate to that than adopt. Adopting the existing has some advantages, but up to certain level. This is like, fine-tuning a car. Yeah, you can paint it, you can remove the rust, you can maybe put nice housepoof or whatsoever, but there are limits you can make with that. Sure. At some point of time you need to buy a new one. So this is the same logic is with technical systems and everything. At some point of time there is no more adoption. But now problem is that we are then usually trying to make general solution or general recommendation, do this or do that, and there is no general recommendation, especially in the situations where you have those complex systems evolving over decades, actually being intersected between each other, and unfortunately, from those which I was having a chance to evaluate, they did not follow some basic architectural principles, like decoupling, the processing part from the data and so on. And this is where problems comes. I saw it in my organization when it comes to replacing one system. This is a nightmare actually to find out what this system actually does in addition to what it was supposed to do once it was introduced 15 years ago. And then, what to do with this extra functionality and things like that. So problem is we are not very good in banking area with this architectural governance. And once when you mess up that and this happens for a decade or two, God help you, actually. I mean, the simpler system would be, build something new and migrate to that. Rather
But this is the case with every system. Every system has to evolve, and then you will have discontinuities and things like that. I think that's the rule of operation.
Not that much rule. I mean, if you say by rule, this is something what we do, doesn't mean that this is something what we are supposed to do. I mean,
yes, I agree. Let's talk about agile and hybrid transition. Do we have any success stories on that?
I mean, look, around agile, I could speak for a long time, but I'll try to squeeze it out. Everything around what we now call agile is, umbrella term. Let's put it this way very clearly. Agile doesn't exist as a methodology or something. It's an umbrella term for many methodologies which were evolved over some 2 decades, 3 decades of time in software development industry to tackle the problem of managing software delivery. But highlight is software delivery, right? Agile is not built for software operations, not built for banking operations and whatsoever. For some reason, we are trying to squeeze it out into that. But when it comes to, again, upgrading systems and so on, if you are considering building system on your own from the scratch, then some of those methodologies for building might be very useful, because in that build you will have to adapt to many different topics and you will not have requirements at the very beginning. If you want to, I don't know, buy from the shelf some system, there is no need for agile development methodology because you're not developing anything. You are taking off the shelf and integrating.
What about the whole COBOL programs we had since the beginning of time? They still exist in some places.
Oh, yeah.
So this is an agile process to try to replace them, no?
Look, again, agile is about...
Do you know about COBOL? Who knows COBOL? And the banking? You all know. Yeah, it's a famous... It's a trend. It's still a trend.
My first language, which I learned is COBOL.
All of us.
Okay. So if I may add something to that. Okay. So what I meant by agile, I agree with Davor that it's a very wide term, and you can use it in different ways. But I meant specifically the stepped approach, right? So kind of an approach that you start with the smallest step and then you make one at a time, right?
That's great. And step by step, quick results. That's
not even quick results, but results at all, I would say. Okay, results at all. What I mean by that is, if you want to change a system, be it a central banking system or a payment system, right? It's a big thing. It's a big budget. It's very complex. It's gonna take a lot of time. It's gonna take a lot of resources, like people from the bank and so on. So the turnover. The return period is also long, right? And that's why it's going to be difficult. Imagine yourself, right? You being the head of the business, right? or Davor, me, right? And we have a challenge, right? We think we need to change the system, okay? It needs to be more modernized, better functionalities, whatever, right? And I need to sell it internally in the organization, okay? I need to make it happen. So if I'll be looking for a decision and acceptance of, I don't know, 100 million euros, kind of a budget, it is less likely to happen. That's first. Then 10 million, let's say, in one go. That's first. And the second, if somebody would need to wait, I don't know, 3 years, 4 years, 5 years to see the fruit of it, the result. If you take a look at the average board perspective, right, it's much less than that, right? So they will not be willing to take decision on a bigger budget, on more risk in one go, and a longer period of seeing the result, right? So you rather cut it in smaller pieces, and you give them the chance to swallow it, one by one, right? So that's kind of an approach. I would say it's more practical.
Great. Sure. Do you want to
I
add
just wanted
something?
to say, I mean, stepwise approach is valid approach. I wouldn't call it necessarily agile. This is just a way to kind of manage the complexity of transformation. However, again, when there is no major development, I would consider different methodologies, simply like that.
Okay, great. So there is no rule. You have to swim.
The rule is it depends. The rule is it depends. But I can give you one rule if you like. I can give you
Yes.
one
Yes,
rule,
I
one
like
example.
rules. Tell me one.
I feel you like the rules, right? So I'll give you one. If you put on Google the name of the panel, right? Rip and replace. Guess what pops up?
We don't use Google anymore.
Okay,
we use other.
I'm old-fashioned. I've used it a couple of days ago, and what pops up is the law in the US a couple of years ago that was cutting out the Chinese companies like Huawei and ZTE, right, out of the US infrastructure for telecommunications mostly, right? So that was kind of a replace rule they took on, right, because they lost the trust for the providers, right? Yeah. So what I would, that's one of the examples that you can have a clear rule. Okay, we need to rip it down, even though it's going to cost us more, because somehow, we don't have the trust for the provider. Let's say, right, that in this particular case. But basically, the whole thing that we discuss here is the same as you and your wife deciding to renovate your bathroom or kitchen, right? It's exactly very much the same.
That's
right?
A very nice and very simple
because
rule.
whatever you do, you need to
yeah.
repeat it in a couple of years again.
We
right?
all understand it.
Yeah.
So it's kitchen restoration. I don't know. Yeah. Do we have any questions?
Bleak.
Yes, Bleak.
Bleak.
This is.
It's as fast as a blink. Yes.
Yes.
Almost.
No. This is used for account-to-account payments, and in Spain they have Bisum. And I know that in the beginning this was created as a rival to the payment schemes like MasterCard, and I see MasterCard made a very clever move and took some stake from Bleak.
That's why I said it's a win-win, I think. Yeah.
Okay, and here in Greece we have Iris, for example. And my point is that in Europe we have too many things, and we do not aggregate. So also from EPI, European Payment Initiative, which is supported by ECB also, we have Wiro. Okay, so do you see space for all of these account-to-account payments through Europe, or maybe they would be isolated for Poland, Central Europe, because they are in Benelux, for example, Wiro? What do you think the evolution of account-to-account payment will be? A short comment, yes.
All right, thanks for the question.
This could be a regulation also question.
I'm sure it's gonna be even. So I'm gonna answer carefully. Okay, that's an interesting question. So clarifying, Bleak is not only P2P payments. It is, and I've heard recently, a couple of days ago, that half of the volume is already a P2P transaction. from based on the phone number, basically, right? From the phone to phone. But it's huge in e-commerce. It's huge in acceptance as well through MasterCard Tap to Pay, right? Acceptance network. So it's not only account to account, but yeah, I mean, I was talking recently, like a week ago, with my colleague from Viro, the Polish guy. He used to work for Bleak, by the way, in expansion, Piotrek Piotrzak, and he was presenting together with Worldline in one of the conferences in Warsaw. The outlook of development of Viro, and we had a nice discussion about the regulations later on as well. And I think if Europe wants to have an European scheme, and apparently they want to again, right, for different reasons, but it's a long story. They need to try to aggregate. It's not so easy. I'm keeping fingers crossed for Viro to develop. I think it's a nice, but again, they need to look. They are already aware that they need to look for compromises. Okay, because they know they are not going to be able to put one hard standard to everyone. Rather, integrate the local players this way or another. And secondly, UX-wise, interesting discussion, because they don't want to follow Bleak route to get some kind of a dependency from the global schemes, being US schemes, right? Visa, MasterCard. So it's going to be very difficult for them to get into the NFC solution, tap to pay solution. So they are more thinking about the QR codes, for example, right? Which are fine for China, but I think the European customers, once you get the better, I'm going to talk about it later on during the presentation, it's hard to go back, right? I mean, once you get more convenient solution being tap to pay, you don't want to get back, to QR codes, which are more difficult to use, basically, right? So I can see a challenge there, right? I can see a challenge there.
I would just have philosophical comment. I mean, every transaction is at the end of the day account to account, right? I mean, eventually money has to go from my pocket to, I don't know, merchant pocket and whatsoever. I do believe that we should talk about, and we usually talk about several segments of it. One is how the money is transferred, really, and the last, which you mentioned, is on the point of sale, actually, how you are initiating the transaction, right? And in that sense, probably at least from technical perspective, this interrelation of these several segments, because not everything is in the hands of one provider, right, has to be aligned. Otherwise, it simply doesn't work. Right?
That's why we are in Athens, to have a lot of philosophical discussions. So I think time is running off. So I want one last very brief statement from you.
Why you are looking at me saying brief?
From both of you. So, please, very briefly, in one or two words, tell me what's your rule for legacy systems?
I would say the following: as long as they work, I would not, kill them just because there is something better.
You're a Copol guy. So.
Not necessarily. I was working as the web developer as well, so I'm old enough to have tried.
So save Willy. Save.
Don't change because everybody does it. Change because it makes sense for you.
Great, thank you.
My rule would be, as I mentioned, it depends. You need to.
It depends.
You need to very carefully analyze each case, mostly financially, risk-wise, and in that practical internal game of the company.
So we have the winners are don't change and it depends. Thank you so much.
Thank you.